In today's video, I'm going to share with you 5 reasons why JPMO, which is Yieldmax's new high-yield dividend fund on JP Morgan Chase, adds balance to your growth portfolio, which also happens to be a lot of Yieldmax funds. As you know, a lot of our Yieldmax plays are growth funds, so this JP Morgan buy should add balance, and I'll share with you why. So we earn over $100,000 per year in dividends at this channel, and my performance value shows that I'm up 44% for the year, 44%. The S&P is up 17, the Dow is up 5, and the Nasdaq's up 33%. So we're beating all of the indexes on a year-to-date basis. We're also up 0.02% today, which is beating the indexes. As you can see above, all the indexes are in the red. So we're living financially free out of our brokerage accounts here at this channel, getting both dividends and capital gains. Okay, you can't just have one or the other. If you just have capital gains, then you don't qualify to banks for loans and really live financially free and level up your account. If you just get dividends, well, a lot of those dividends decay or erode and just give a lot of that money back to you, so you don't really grow your portfolio. You have to get both dividends and capital gains. If you're interested in living financially free out of your brokerage account, email me for my e-guides at aikandtodd48@gmail.com. I have e-guides on how to play Cornerstone properly, which is my top weighted fund in my portfolio. I have $500,000 in this fund. Okay, and it's a 5-star fund, so do your research on that if you're interested. And I have e-guides on how to use margin to live financially free out of your brokerage account. For every $1 you put in your account, you get $4 of purchasing power. I just use a fraction of this margin power, which you can see down here below, which, yes, it's gone up today since we added 5,000 of JPMO. I just use a fraction of my margin, which is low debt, 6% interest. It doesn't show up on a credit check. You can click sell at any time, and this is how I really get ahead. But you have to do it right, okay? You have to use balance, and you have to tie your investments to indexes. You have to follow a few criteria here, which I'm going to spell out in this video. So let's go ahead and get into it. By the way, when you buy my e-guides, you get access to my phone number to call me anytime at, and you get free access to the Discord chat room, which is here below. And we'll show more of that as the video goes on. So, okay, the first reason why you want to buy JPMO for balance in your Yieldmax portfolio is maintenance, okay? JPMO, we just bought 5,000 here, and guess what? The maintenance is 30%. All right, now this could change, okay? The maintenance could change. As we all know, we had X on at 30% once, and then it changed to 50. But I believe Microsoft has stayed at 30% maintenance, and JP Morgan is such a high-quality name. This could very well stay at 30% maintenance. This means that for every 100,000 I put in JP Morgan, only 30,000 of my equity is taken up. Okay, so if we go here to my brokerage snapshot page, you can see here my available withdrawal is 195,000. So I just bought 5,000 of JPMO, and it barely even budged my available withdrawal. Okay, because what's 10% of 5,000? 500. What's 20%? 1,000. What's 30%? 1,500. So I lost 1,500 of available withdrawal. Okay, so my available for withdrawal is still very high, and you need to keep this high if you want to live financially free out of your brokerage account. A lot of people don't like to use margin. That's fine, but you might want to spend out of your brokerage account. You might want to withdraw some of your margin because it's lower interest than a mortgage or than a credit card. So a lot of people might not, again, trade on margin, but they'll buy things outside of their accounts. I use my E-Trade brokerage account here to live financially free in the world. I can swipe my E-Trade card wherever I want. I can buy cars, clothes, shoes, houses, whatever with an E-Trade credit and checking card. And all the things that I buy on E-Trade come straight out of my brokerage account, and they're automated. So I keep all my bills automated here as well. So I don't even pay a bill. I mean, I pay my bills, but I don't even notice them. They're all just automated out of my E-Trade account. But you have to keep this number high once again. So if I had a 10% correction, could I withstand a margin call? Yes, because 500,000 account value plus, let's say, 300,000 in debt, 800,000, 10% market correction for me would be 80 grand, because 10% on 80 grand. 20% would be 160 grand. So I can more than withstand a 20% correction in my account, okay? And as you guys know, 20% doesn't even bother me because I have Cornerstone, which we're not going to get into in today's video, but Cornerstone's dividend is set for the year. This 500 grand I have in Cornerstone, 20%, it's set for the year, unlike Yieldmax funds where those dividends can fluctuate as the volatility fluctuates in those stocks. So 20% correction in the market, I'm pretty much going to break even. And then if we have a correction beyond that, I always keep my put options on at all times, okay? So here are the QQQs and the SPY puts. I've already loaded up on my Octobers, and I have some Septembers that are dwindling away here. So this is how I keep crash insurance on in the portfolio at all times. So the first thing that you do with JP Morgan when you're adding it into your account is you look at the maintenance, okay? And again, the maintenance is low, 30%. That's really special, okay? Let's see if that changes. The second reason why you want to buy JPMO to add balance to your growth portfolio is for better correlation to the S&P, okay? When you buy these top Yieldmax funds, you're getting the top 20 weighted stocks in the S&P. So look at the first 10 stocks on the S&P. Okay, here this is a Zacks website here. Okay, Apple, Microsoft, Amazon, Nvidia, Google, Goog. Okay, Meta, Berkshire, which Yieldmax will have a fund out on soon. Tesla, United Health. Okay, now let's go to the second page. We don't have United Health, but we have Exxon, that's a Yieldmax fund, and we have JP Morgan now. JP Morgan is 1%. So if I have of the index, so if I have 50,000, if I have 500,000 account value, 5,000 of JPM is about 1%. So that's why I bought 5,000 of JPMO. And also the maintenance was so low that it didn't take up much of my equity. A lot of the other Yieldmax funds are 50%. So when you buy 100,000 of, let's say, a Tesla or Tesla at 50%, 50 grand of your equity is taken up. That's too much for me. I'm trying to live financially free out of my account. Now, I tie most of my investments to the indexes, which has Tesla, which has Apple, Microsoft. So Cornerstone has all of those funds and all those stocks within it. And so I'm just happy with tying my investments to the indexes, okay? Because you have to put all your money behind something to benefit, and you can't put all your money behind a stock. That could lose. You could blow up. You might not even get any sleep over something like that. So you have to avoid headline risk and stay in the indexes like I do. Obviously, you have to learn how to play Cornerstone. Okay, you can't just buy a Cornerstone. You have to play that rights offering properly. Most closed-end funds have rights offerings, and that's what I alert you of here on the Discord chat room channel. Okay, so we have hundreds of members here, over 300, almost 400 members at this Discord chat room who are all living financially free out of their brokerage accounts. They're trying to, at least, and they can all share their unique experiences with you on who does the Cornerstone drip, which, by the way, I just must say really quickly for all you newcomers here at the channel, the Cornerstone drip, CRF, look, the market price is 8, but look at the drip price, okay, $6.49. So we get the 20% dividend drip back at NAV every month, okay, for a 27% gain here, $6.63, 25% gain, $6.42, 29% gain. So $6.27, look at that, 32% gain. This is $1,000 each month. I get the $7,000 dividend from Cornerstone each month, plus those drip gains, which you just saw, $1,000 of drip gains. Plus, I get a 21% dividend in Cornerstone, and plus I get days gains potential. Now, Cornerstone's down today because the market's been down, but Cornerstone has been significantly outperforming all my other indexes and stock holdings. I would put all my money in Cornerstone, but I want to diversify away from Cornerstone just because sometimes I feel like it's too good to be true. All right, I've been in it for years, and it's always been as good as advertised, but I'm just making sure I tie my investments to the indexes here with Cornerstone, and then I'm diversifying with Yieldmax. And as I do Yieldmax, I'm layering more index on top of Cornerstone, because the way that we have it constructed, again, if you go to the Zacks website here, you can see that the top 10 holdings are basically our Yieldmax funds. Okay, I don't know how to click this thing out. Let me see if I can zoom out. The top 10 holdings are our Yieldmax funds. And then on the second page here, we have JPM and Exxon, which again we own. So if you go to the first page, this is a lot of Yieldmax, and I'm reconstructing the index here manually myself with Yieldmax funds, and then JP Morgan's a highly weighted stock in that second page of the Zacks holdings, which is a top 20 weighted holding of the S&P. So this is how I'm getting my performance, okay? I'm tying everything to the indexes, and then when I buy Yieldmax funds, I'm making sure to create another index within the index. Another reason why you get balance here with JPMO is you get better diversification, as financials are a top 10 sector of the S&P. So most Yieldmax funds are growth, as I already alluded to. This is finance. So now we've been given 4 sectors from Yieldmax. We've been given tech, consumer cyclical, which is Disney, okay, finance, which is JPMO and even Coney, you could say, with Bitcoin, and then energy with Exxon. So we're missing 6 other sectors to fill out our portfolio with Yieldmax to make a perfectly balanced portfolio on top of our index positions. But we probably won't see certain sectors of Yieldmax that we're missing, such as utilities, because those are low volatility. Healthcare, which is also low volatility. And I've recreated my own healthcare. AbbVie, we have 1,000 in that. And then we also have THW as our healthcare play. Okay, THW here, it's our diversified healthcare play. Because if you go back to the second page here of the holdings of the S&P, you can see healthcare is a large percentage. J&J, Eli Lilly. Okay, and if you go to the third page, I think you'll see AbbVie is not far. There it is. Okay, we just had Merck, but we sold Merck for a gain. So that's another sector we're missing. Okay, healthcare, but I don't think you'll see it with Yieldmax. So I recreated it with my own stocks. Okay, and the stocks have a nice enough dividend to hold that. AbbVie has a nice dividend. By the way, here's Citigroup. I also keep Citigroup as added diversification to get more performance out of financials. So yes, as we know, JPMO won't move up as much as the stocks will. JPMO will not move up as much as JPM will. So I keep Citigroup on as that little hedge so that if we go higher in the market, then we still win capital gains wise with financials. And I added to Citigroup today on the dip. And Citigroup's another best of breed, just like JP Morgan. Okay, so we get better diversification, all right? I just want to finish that point on diversification. The other sectors that we're missing, utilities, you won't see a Yieldmax fund probably for that because it's too low of volatility. I don't even have any utilities right now. I just have Exxon as my energy play, and I'm just sticking with that. I could buy utility play down here. I'll make another video on that soon because I think they could be cheap now, and they could have pretty good yields here. Also, okay, we're missing consumer staples. We can't find a Yieldmax fund on consumer staples. You probably won't see that, but look, we have Altria as our consumer staples play. 1,500 in that because it has almost a 10% dividend. That's our consumer staples play, and it's within the index, so we're matching the indexes here. We're creating our own mini index on top of our index plays in Cornerstone, because Cornerstone is the foundation of my portfolio. It's the foundation of many clients and subscribers' portfolios here at the channel, and so I'm going to keep it that way. And I'm going to build out this index within the portfolio with Yieldmax funds, and then buying the stocks myself, like AbbVie, Altria, Mo, etc. Okay, you're also going to get better valuations with JPMO. Okay, look at the chart of JPM. Okay, this is looking very nice. Okay, JPM. Okay, let's go check out this chart, because how JPM goes, so does JPMO. All right, so look at this chart. Okay, we're up 0.19% for JPM. Doesn't have a large enough dividend for me to get excited in the stock, but I like JPMO for its dividend. Now let's go look at the chart, and you'll see that this is almost perfect timing. I don't know, Yieldmax has been giving us great timing, I think, lately. All the stocks that they've been releasing, they try to do it after a big run when they can capture those premiums. And then, down here, look, we're at the 200-day moving average. We're almost at that black line. We've hovered on that purple line, which is very important as well. That's the 100-day moving average. But the black line, 200, that's where it's all important. We just saw a huge pop off Tesla, trying to buy that around the 200-day moving average. So this is looking very constructive for JPM. Financials are cheap. They've gone largely nowhere for the past few years. Unlike Tech's had a great run for the last few years, so you're going to get that balance with financials, and you're getting a good entry point, in my opinion, with the financials. Okay, so I think that'll pretty much do it for the video, guys. I don't want to go too long here. We're getting better maintenance with JPMO than other Yieldmax funds. We get better correlation to the S&P now because it's one of the top 20 weighted stocks. We're getting better diversification as financials are a top 10 sector of the S&P. We're getting better valuations than growth, because look at this chart of JPM. It's almost a textbook chart. JPM's a definite upgrade in your account. It's a best of breed. Okay, you can't say that for other high yielding dividend funds that just decay over time. Most dividend funds I know of are low rated, and that's why I like Cornerstone, because it's highly rated. And so also I keep everything at the index allocation level. I'm matching JPM with the indexes, so I shouldn't get hurt there, and I should just increase performance. So if you need help understanding maintenance, that's in my Margin E guide, by the way. You can email me for that. And And if you have questions on how I'm living financially free out of my brokerage account, email me for my e-guides at aikentop48@gmail.com. Again, when you buy my e-guides, you get free access to my phone number to call me anytime at, as well as free access to the Discord chat room. Okay, you'll be a member for life when you buy my bundle, when you buy all 4 e-guides. Which also, the 4 e-guides I have: Volume 1, Fundamental Analysis; Volume 2, Technical Analysis, which shows you how I use those charts for my better entry points. Or you can go to Carbon Zero's channel here, who focuses on day trading and technical analysis. He's a great addition to the channel, and he's a great, he adds a great amount of value, another dynamic layer to the channel, to the Discord chat room, for his day trading prowess. Okay, so you can check that out. We also have other channels here at Discord. We have a brokerage specifics channel if you need help understanding margin. That's here in the broker specifics channel. If you need help understanding who has the drip for Cornerstone, you can find that here in the brokerage channel, all things margin related. We have a Canadian channel. And then we also have, I think most importantly, my daily portfolio recap here. This is where I track my portfolio when I'm not on YouTube making videos. So here it is, and I track my alerts. I give you my alerts, and I share with you all of my holdings when needed, so that you can track my performance in line with your portfolio. So anyway, that'll do it. I hope you liked the video. If you liked it, click like or subscribe, and I'll talk to you soon, guys. Thanks.